Okay, so let's compare the long call strategy versus buying a stock. So we're using our Apple example here again. So if we were to buy the shares of Apple, it would have cost us $110.11 per share. Our long call strategy only costs us $24, so this is obviously less risky. Our total investment was $11,011 if we bought 100 shares of Apple stock. With the long call strategy, it's only 2,400. So again, this is a much better performer here. The profit, remember our target price in this trade was $150. So if Apple did get to 150, we would make more dollar amount on buying the stock than we would in the calls. And the reason for that is you're paying for time value in the call option, which is eroding some of your profits. So that gets the tick here. In terms of return on investment though, this is a big winner because you're not risking as much capital to make 3,100, whereas buying the stock you're risking 11,000 to make your 3,000. So again, the return on investment here is much higher. Dividends is a plus for the stock side. You don't get dividends, we actually own call options. So that's a negative for you. It's a positive if you own the shares. You do get 1.9% per annum in dividends. The break even as well is lower on the long stock strategy. All that has to do is trade above 110.11. Now, with the long call one, remember what we said about the break even. We're assuming we're close to expiry and there's no time value left in the option. In that case, it would need to trade above 119 to break even. Having said that, between now and that expiry, which was nearly a year and 2 or 3 months away, for this particular example, there is going to be time value. So this isn't exactly rocket science here. This is assuming the very last day of expiration. Our time frame limitations, you don't have any time frame limitations on stock, but with the long call option you kind of do. You need this thing to move upwards really within the next year and 2 months in order for you to start making a profit. But we have offset some of that risk because we went in the money in the calls, which allows us to live to fight another day. Okay, there you go. There's the pros and cons of investing in stocks versus investing in long calls.